Welcome to the Dip Dive. Today, we're getting into something that might be on your radar. Maybe you've just heard about it. Unregulated online trading environments.
Right. We know some of you listening might already be involved, or maybe you're just curious about, what's out there beyond the usual rules.
Absolutely. And to help us unpack this, we've got some really interesting material today.
We do. We're looking at excerpts from The Role of Big Data and Cloud Computing in Algorithmic Trading, which comes to us from Faida Ventures LTD.
Okay, great. So let's start with the basics. Based on this source, what exactly is an unregulated trading environment? Let's nail that down first.
Sure. So fundamentally, it's talking about markets or maybe platforms that aren't directly supervised by the big regulatory bodies.
Like the SEC or FCA.
Exactly, like the SEC in the US, the FCA in the UK, CySEC over in Europe, those kinds of organizations. They're the watchdogs, and they're basically not watching these specific spaces directly.
Got it. So a bit like the Wild West, maybe, does the source give us concrete examples of where you'd find these?
It does, yeah. It points to things like offshore brokers, the ones operating outside those main regulated areas.
Yeah.
Then you've got proprietary trading platforms, often smaller, more niche firms use them. And, well, the big one everyone talks about, crypto exchanges.
Right, crypto. Regulation there is still kind of catching up globally, isn't it?
Very much so. And then the list goes on. Peer-to-peer networks are mentioned, where you cut out the middleman.
Uh-huh.
And even private managed accounts sometimes fall into this category.
Okay. Now, the source also mentions why people might be drawn to this. What's the appeal? Lower costs, maybe?
That's a key point the source brings up, yeah. Potentially lower costs, and maybe fewer barriers to entry. Fewer hoops to jump through when you start.
Sounds good on the surface. More flexibility, quicker access, perhaps?
It can sound like that. But, and this is crucial, our source immediately flags the trade-off.
Which is?
Well, when you step outside those established regulatory frameworks, you're also stepping away from the legal protections they provide.
Ah, okay. So the responsibility really shifts. What are some of the big challenges the source highlights in these, let's say, less regulated zones?
The first one, and it's a biggie, is the lack of robust oversight and, critically, investor protection.
Okay, so for you listening, what does that mean in practice? No safety net.
Pretty much. I mean, in regulated markets, if your broker fails, there are often schemes like compensation funds that can help you get some money back.
Right.
You also have formal ways to resolve disputes, fraud prevention protocols,
Right.
stuff like that. In these unregulated environments, often none of that exists.
So if something goes wrong, a platform collapses or there's fraud.
Then, as the source implies, getting your funds back could be extremely difficult, maybe even impossible. The safety net just isn't there.
Wow. That really does put the pressure on the individual, doesn't it? Okay, what's next? The source mentions KYC and AML compliance. Know your customer, anti-money laundering.
Yeah, and the observation here is that signing up on unregulated platforms can often be, well, quicker. Less paperwork, less stringent identity checks compared to the big regulated exchanges.
Okay, faster sounds convenient, but what are the downsides for you, the trader?
Well, a couple things. First, the source kind of hints that easier signups might unfortunately attract, let's say, bad actors. It potentially increases the risk on the platform itself.
Okay.
And second, even if you're doing everything by the book, that lack of thorough KYKML up front could cause problems later. Think account freezes, restrictions, especially as global rules change and maybe these platforms try to catch up.
Right. Interesting that the source mentions ethical traders sort of taking it upon themselves, proactively following best practices, even if the platform doesn't force them to.
Exactly. Bringing your own standards in a way. Which actually leads nicely into the next challenge. Legal gray areas.
Legal gray areas. It sounds tricky.
It can be. The source points out that many of these environments operate in places where the laws are maybe unclear or still evolving, especially around digital assets or new trading models.
So what kind of actual, headaches could this cause for someone trading? Does the source give specifics?
It does. Think about taxes, for instance. How are your profits taxed across different countries? That can get complicated fast.
Yeah, I bet.
Or just getting your money out, repatriation of funds. Are there rules or hurdles? And then there's the legal status of the trades themselves, especially with crypto or maybe cross-border FX trades. Are the contracts fully enforceable?
So the agreement you think you have might not be legally solid, depending on where you are, where the platform is. Lots of variables.
Exactly. The source flags those as potential minefields.
Okay. And the last major challenge mentioned is around performance reporting and auditing.
Yeah. In the regulated world, there are standards for how platforms report performance. how they keep historical trade data. Often there's some independent checking involved.
Verification.
Right. And in unregulated spaces, as the source notes, those standards often aren't there. So you might lack that crucial third-party verification. You're basically relying on the platform's own numbers.
So you see these great results, but how do you know they're real or
Well,
presented fairly?
Precisely. It's harder to be certain. But the source does offer a sort of countermeasure here.
Which is,
A strong focus on transparency, like self-imposed accountability.
okay, self-imposed. What does that look like? How would you know?
Well, the source gives examples,
Mm-hmm.
like maintaining a track record that can be verified somehow, maybe independently, offering real-time dashboards so clients see exactly what's happening.
Live data.
Yeah. Or using third-party trade mirroring systems, things that provide an unbiased record.
Yeah.
It's about the platform choosing to build its own system of trust and verification.
Okay, so it seems like in these spaces, trust has to be earned much more actively, both by the platform and the trader being vigilant, which leads us nicely into the advice from the source on trading responsibly here. First up, full transparency.
Yes, absolutely key. The source really stresses being upfront about, the operational setup, the risks involved, especially if you're dealing with clients or partners.
Being clear about what you are and what you aren't.
Exactly. They even mention their own practice at Faida Ventures, explicitly stating they aren't a regulated entity and really pushing clients to make informed choices. No ambiguity.
Sets the right expectation. Okay, second piece of advice. Secure custody of funds.
Makes sense, right.
Hmm.
The idea is that whenever possible, the funds should stay under the client's direct control.
So not pooled in the platform's account.
Ideally, yes.
Yeah.
The source recommends using brokers where you, the client, keep access and authorization over your own money. It just massively reduces that custodial risk, the risk of the platform itself mismanaging or losing your assets.
Right, you hold the keys, basically. Third point, self-regulation. This sounds interesting in an unregulated context.
It does, yeah. But the idea is to implement your own internal rules and procedures that kind of mimic the standards you'd see in regulated markets.
Like what?
Like doing proper client onboarding checks, even if not strictly required. Providing very clear risk disclosures. Maintaining regular, transparent performance reports. It's about adopting that regulated mindset, even without the external regulator.
Building your own framework.
Mhm.
Okay. And the final piece of advice is about legal preparedness.
Absolutely crucial, especially if you're doing anything cross-border, dealing with international clients or laws. The source strongly advises working with legal experts.
Lawyers who know the specific, often tricky area.
Exactly. People who can keep you updated on the international trading laws, which, let's face it, can change pretty quickly.
Definitely. So, okay, pulling this all together, it sounds like the source offers a pretty balanced view. It's not all negative.
Not at all. They definitely acknowledge the potential upsides, innovations, speed, maybe higher profit potential, but they're very clear-eyed about the unique challenges too. The risks are different and maybe higher in some ways.
And the key to navigating it successfully, according to them.
It really seems to boil down to a mix of things. Education, really understanding the space you're in, transparency, being open about it, and proactive risk management, not waiting for problems to happen.
And it's worth noting, as you said, the source itself emphasizes its own commitment to ethical standards, even operating outside strict regulation. That's a statement in itself.
It is. It sets a standard.
So for you listening, the big takeaway from this deep dive seems to be that, yes, there might be opportunities in unregulated trading, but it comes with a hefty dose of responsibility.
Absolutely. You need to be much more proactive about understanding the risks, the legal side of things, demanding transparency. You can't rely on the built-in protections you might find elsewhere.
Diligence is key. Being informed is key.
Paramount, really.
Okay, so let's leave you with a final thought to chew on. Considering how fast technology is moving, how financial markets keep evolving, it does make you wonder, doesn't it?
Wonder what?
How might the whole idea of regulation itself need to change or adapt to keep up with these less defined, more fluid trading environments in the future? That's a really big question. A vital one. And I guess the way to stay on top of that and everything we've discussed is just to keep learning, keep seeking out resources that really value education and transparency.
I'd agree more.